called crypto an index for money laundering. BlackRock
and thieves.
And thieves.
Yes.
Money laundering and thieves. Right. You now have the biggest Bitcoin ETF. So what happened here?
I have very strong views, but that doesn't mean I'm not wrong. By having strong views, you have to test yourself and ask yourself. And, in my role, I see, thousands of clients a year. I have, governmental leaders, and we have these conversations, and my thought process always evolves. And this is a very glaring public example of a big shift in my opinion.
There you have it, ladies and gentlemen. Larry Fink admitting he was wrong on stage there with Brian Armstrong. And doesn't this picture of them both just perfectly sum up 2026? 2026, we believe, is going to be a good year. If you're asking what happened to alt season, well, go and overlay the US PMIs with many of the altcoins out there, and they'll very much mirror it in terms of how they've moved. There has been a real concentration with the stock market, and we'll talk a little bit about this towards the end in regards to AI and the tech sector. You can see this through CapEx. The rest of the equity market and businesses have largely been starved due to a very tight and restrictive Federal Reserve. Despite that, the markets broadly have rallied, and we've been very right on that, but it's been concentrated. The same thing applies with crypto. Bitcoin has done very well due to the BlackRock institutional ETF news, whilst the rest of the cryptocurrency market has been starved due to the same reasons, really, that the small cap stocks have, because there's no breadth kind of in this market due to economic drivers. However, we think that's going to change, and change in a big way. We think the Fed is going to be very supportive moving forwards. That's been signaled by Jerome Powell. They stopped QT on Monday. That was met with fears around the Japanese yen carry trade unwind. My personal opinion is the majority of that has already been unwound in regards to the first rate hike. Smart people wouldn't have thought, okay, there's a potential scenario here, let's just ignore it and see if it happens. Let's actually position pre it happening, i.e. they continue to up rates. But I think your Fed is effectively going to be supportive. They stopped QT. I think, again, we've engulfed that entire pullback on Monday. We did say that was going to happen. Due to it being overblown, we didn't see the same reaction in the stock market, which undoubtedly has more yen in it being carried over. But they've stopped QT. I do believe they're now going to add to their balance sheet. And the reason being is to, like Jerome Powell says, to support the financial system, the banking system, and the economy. And I think we're very close to that. And that sees alts do extremely well, but actually also sees the breadth in markets that we're expecting. We very much think that is around the corner. So crypto markets broadly should do well into that. There's going to be front running of it. I think we're already starting to see that. I think if you look at all the institutions positioning and enabling crypto ETFs, they're probably expecting that also. Very interestingly, Citi recently, or this has been circulating, this is to effectively the SEC from Citadel, not Citi. Citadel Securities. It's dated the 2nd of December 2025. This is really interesting for a number of reasons. There's good and bad to this. The good, of course, is Citadel Securities' acknowledgement that crypto is the future as effectively a leading market maker in the United States. And they talk about tokenization. Let's read this. Dear Miss Countryman, Citadel Securities appreciates the opportunity to provide input to the Securities and Exchange Commission, the Commission, as it evaluates requests to grant exemptive relief to facilitate the trading of tokenized US equities by US investors. As the leading market maker in the United States, we stand at the forefront of innovation in our financial markets, deploying the latest technology to deliver unmatched liquidity and competitive pricing to our clients. Thus, welcome technology or tokenization as another innovation that has the potential to further improve outcomes for investors and issuers, including with respect to clearing and settlement efficiencies, shareholders' engagement, and investor choice. Realizing the potential benefits of tokenization requires applying the key bedrock principles and investor protections to underpin the fairness, efficiency, and resilience of the United States equity market. Ultimately, tokenized securities must succeed on the merits rather than via regulatory exemptions. Therefore, while we support the Commission's initiatives to champion innovation and position the US as a leader in digital finance, it is important not to override key investor protections when trading tokenized securities. Talks about how tens of millions of Americans rely on the equity market for their retirement funds. Good and bad to this. Citadel Securities, the leader in regards to markets in the United States, acknowledging tokenization. This is going to take place majority on public DLTs, in my opinion. They're also pushing back in regard to the SEC's Project Crypto and exemption towards it. Now, I think they're looking to exempt it and then sort of fill in the gaps. But I think really, from Citi's point of view, this is about maintaining their dominance. You know, they're a leader. What might they want to push back on tokenization? Because they provide infrastructure to clearing and these kind of things that tokenization largely can not eradicate, but minimize. So it's no surprise they're pushing back, but in doing so, they're acknowledging that this is the future. This is from Brian Armstrong, and he is referencing or retweeting, I think, the CEO or the founder of Uniswap's tweet. First, Ken Griffin screwed over Constitution DAO. Now he's coming for DeFi, asking the SEC to treat software development of decentralized protocols like centralized intermediaries. Bet Citadel has been lobbying behind the closed doors on this for years. Okay, that's all pretty bad, but the actual nerve for one of their arguments to be that there is no way for DeFi protocols to provide fair assess of all things, making sense of the king of shady TradFi market makers doesn't like open source peer-to-peer tech that can lower the barriers to liquidity creation. This is, and he quotes the SEC filing that we just read the kind of intro on there. Fair access, exchanges and large ATSs must fairly apply objective access standards to all prospective subscribers, thus removing discrimination amongst market participants with respect to all functionalities, order interactions and fees. There would be no equivalent requirements for unregistered DeFi trading systems, enabling them to limit access arbitrarily, including to a single affiliated member or preference certain members over others, including affiliates with respect to orders, interactions, and fees. This is just a typical example of the Empire Strikes Back. Ultimately, there's a major shake-up taking place. So there's good in the sense that Citi acknowledge tokenization is the future, but they, of course, are going to fight for their business model. That's natural. You would do the same thing. We're all hypocrites as human beings. If you were Ken Griffin, you'd probably maybe try and argue the same thing. And this isn't addressed to Hayden, by the way. I like Hayden. I think he's done a hell of a lot of good for the entire space. Pioneer in DeFi. DeFi is going to be huge. This would stifle it, though. And there is this kind of grey area with a lot of things. But very interesting. So 2 huge pieces of news over just the past 24 hours. Larry Fink admitting he was wrong on Bitcoin. And Citadel acknowledging the revolution that is tokenization whilst trying to perhaps preserve their business model. This is Bitcoin. Of course, we believe it's still an uptrend and it will recover. And that's based on what we think the Fed is going to do next year. We think what's projected, the dot plot, where the Fed funds is, or the Fed watch tool is, where the US 2-year yield is, that they're going to get in front of, I believe. They're behind the curve at the moment. All predicts interest rates coming down. If you look at what that historically does for the business cycle, interest rates come down, it spurs the business cycle on. I did this with my Patrons yesterday. If you do want to go and watch that, do become a Patreon. Great opportunity today. End of the year, going into next year, we are going to ramp the price up probably by about half. The lowering of the Fed funds rate typically stimulates the business cycle, which is the reason why altcoins haven't really performed and small cap stocks and the economy more broadly because of these tight conditions. It also pulls money out of money market funds, of which there was $8 trillion announced yesterday, to the tune of probably, I reckon, about 20% will flow back into the markets. Interest rates coming down, flows out of money market funds, typically finds its way. I can show all this technically in regards to the stock market. On its own, it stimulates the business cycle, and you've got them potentially adding to their balance sheet to support the banking system, which right now needs liquidity. In the overnight reverse repo, which the Fed will add to support the banking system via adding to their balance sheet, effectively creating money, holding the debt on their balance sheet, putting it into the overnight reverse repo, and then banks will go and borrow from that, thus pushing money into the economy. They are going to do that, and that's an environment that typically sees things do very, very well. When the Fed... I'll show you this because this is interesting. When the Fed... do we want that one? No, we don't. We want this one. I do apologise, guys. It's been one of those mornings for me. When the Fed... We'll use the Bitcoin orange. You know, you can see this. So what I have in orange here, this is a little bit confusing now, is everything outside the top 10 versus the top 10. This is alt season. And you can see when they inject liquidity, which we're potentially seeing the signs of, this chart hasn't updated, by the way, in terms of the reverse repo. When they start injecting liquidity, which is signal, that should spur on assets more broadly, certainly small caps and smaller cap stocks, which we believe are going to outperform large cap stocks via the IWM versus the SPX. We've been looking at this for a while. I think this outperforms. And also via BTC DOM, which I think is finito. It's interesting. I wonder what's happening on the smaller time frames. Go to a sort of hourly. It's not going to give us too much. But I do think the Fed is going to step in. I think there's a number of signaling from that. They're going to lower interest rates, which is spur things on, and they're going to effectively add to their balance sheet to support the financial markets and the economy. This ultimately is stimulatory and should see markets do well. I believe altcoins, if you're an altcoin investor, you're positioned better than anybody in regards to being the biggest beneficiary of what's to come. Hang in there, guys. We're going to keep you up to date on it on a day-to-day basis. On that note, I'm going to love and leave you. Thanks, everyone, for watching. I'll see you all in the next one.